So how much exactly are you supposed to be contributing to your 401k? The answer here is super important because it could impact basically how baller your retirement ends up being, but also how much you need to be saving over a lifetime leading up to that. So in this video, I'm going to explain how to figure out the right number for you. Hey guys, Jessica here. Before jumping into it, really quick call out that we're Uprise. We're a fintech company that puts together personalized Wall Street level financial plans completely free. And so this is a lot of what we help people with, which is helping them figure out, are their retirement accounts optimized, what adjustments to make, stuff like that. So to get your plan, definitely check us out. I've linked to us in the description below. Also, if you get value out of this video, please leave us a comment letting us know what helped you the most. And also give this video a thumbs up, hit that subscribe button. It really helps small channels like ours. Getting back to it. So saving for retirement and retirement accounts. So retirement accounts are hugely tax advantaged accounts, meaning like if you're able to contribute to these retirement accounts, it could save you tons and tons and tons of money in taxes over a lifetime. But there are limits, meaning for 2022, the limit, the total amount that you're allowed to contribute into a 401k is $20,500. So that's the limit, but whether you should contribute that amount or some smaller amount, this is what I'm going to talk about in this video today. Basically, to figure this out, three key things. The first one is how much your employer matches. The second one is what kind of retirement are you thinking about? And the third one is sort of a broad category of things that you should be thinking about, which I'll talk about just all lumped together. All right, jumping into it. Okay, so the first one is employer match. So if your employer offers a 401k match, the way you would know this is you would check the benefits brochure, like probably when you signed on as an employee, they would give you a benefits brochure or probably in your company's HR portal. But basically in that brochure, it'll say something like, we match 50% up to 4% of your pay, something like that. If you have this, take advantage of it because this is free money. Like they're basically giving you, for every dollar you put in, they're giving you 50 cents, right? If that was your program. Try to contribute as much as you can up to the maximum that they are matching. Okay, so this is the part that you have to calculate. And the thing is here, the reason why everybody's answers are different is because it really depends on you. And what kind of goals you have for retirement. So for example, when do you want to retire? Like at the normal retirement age of 67, or maybe you want to try to retire at the age of 30 or the age of 50, or maybe you're the kind of person who never wants to retire. And simultaneously, like how much money do you want to spend in retirement? Are you going for like crazy yachts and stuff like that? Or are you going for like, hey, I just want a normal lifestyle, whatever it is, the answer, that amount of money that you need to save up is going to be different depending on your answers to those questions. By the way, I've heard a bunch of recommendations that you should be saving between, say, 10 to 15% of your income towards retirement every year, which is not a bad rule of thumb. That said, like, as I just mentioned, a lot of people have different ideas for what retirement's going to mean. And so it doesn't hurt, and it also doesn't take very long to plug your numbers into a calculator and figure out your specific number. So I'll link in the description below to a bunch of calculators that I think are good. And also, this is actually something that Uprise helps a lot of people with, which is like taking a look at your specific situation, then helping you figure out a number. So if you want a second pair of eyes on that, definitely check us out too. One thing I'd call out while you're running these calculations is to not bank too much on Social Security. So the Social Security system in the US is kind of flawed. And basically, especially if like retirement is like many years away, the chances that it'll still look, the program will still look the way it does today is probably pretty slim. And so anyway, just means that you should try to save up, assuming you won't get very much from that program. Also, I wanted to say that even if you're not able to contribute your total number, try to contribute as much as you can. Because the thing is with retirement savings, like the earlier you can contribute, the more time you have for that amount of money to compound, which makes a huge difference. So, and also in the future, right? Like as your income goes up, as you get annual bonuses, you'll be able to hopefully continue to contribute and make up for it when you can. Okay, so the last category is just broadly other things to think about. The first one is thinking about over-contribution to your 401k. Like, are there scenarios where it makes sense to over-contribute, contribute even more than your number? Yes. So those scenarios would be like if you want to preserve flexibility for the future. So maybe you want to go and join a startup in the future, or maybe you want to go to grad school, or maybe you want to start your own startup. Any of these kinds of scenarios, you won't be able to, when you're in grad school, for example, you're not bringing in a ton of income. And so as a result, you won't be able to contribute as much into retirement than when you have a job with amazing benefits. So if that's you, if you think that you might be doing things in the future where saving for retirement will be less of a possibility, then try to contribute more now, knowing that you're going to be covering those years in the future when you won't be contributing. The other thing is that, especially if you're thinking about possibly over contributing, is that retirement accounts, while super, super tax advantaged, are not very liquid, meaning like in general, you're not supposed to pull the money out of those accounts until you're old. Otherwise, you get hit with penalties. And so it's frequently this trade-off between like, do I want to lock it up and get these big tax advantages, or do I want to save that money for medium-term goals? Whether it's like, hey, you want to buy a house, you want to get married, whatever it is. The one call out I would say on this is that actually if buying a house is your medium-term goal, the IRS allows you to pull money out of your 401k to buy your first house that you live in, so your first primary residence, they call it, without penalty. And so if your medium-term goal is to buy a house and your long-term goal is to retire, then you should feel free to contribute to a 401k or an IRA without any issue. And that's it. If you have any other questions about retirement savings, we've done a bunch of videos about these. For example, like Roth versus traditional. If you have questions about that, we have another video. I'll link to that up here. You can also leave us a comment and let us know there too. If you'd like more support with personal finance, you could definitely check out Uprise as well. I've linked to us in the description below. As mentioned, we put together personalized Wall Street level financial plans completely and 100% for free. So if you have any questions about your specific situation, how much to be saving for retirement, budgeting, employer benefits, whatever it is, we'd be happy to help. And on average, we put $1.5 million in net worth back into customers' pockets. Other than that, if you'd like to see more videos like this one, please give us a thumbs up, hit that subscribe button, and click the bell for notifications. See you guys next time.